Let's talk today about the U.S. harvest and the market impact on both corn and soybeans, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we'll talk about trade today, trade with China, but also I want to hear from you specifically about the closing on Friday for both corn and soybean.
Well, we had really a pretty positive week here. Started out with some good news about the U.S. exports being about 4 or 5 million higher than expected. Excuse me, I'm sorry. It was NOPA crush that was 4 or 5 million higher than expected during September, and then various announcements, things of that nature along the way. We had a good weekly progress number to take our U.S. beans over 60% harvested. But we came into Friday here after pretty good weekly exports. It was over 50 million in beans and over 30 million in corn. But that really got things excited, and we pushed things up technically very strong. But unfortunately, traders just do not like to extend their enthusiasm like that over a long weekend or any weekend, let alone a long one. This wasn't a long one, by the way. It turns out that they decided there wasn't anybody else up there helping them out. So a lot of people decided to set back, pull their product or pull their prices and take a little lower value, get out. But I don't know if that's really a huge factor here. I think the market is really finally getting closer to a post-harvest kind of thoughts and what's going to happen there. The U.S. producers have not been much of a marketers here. Only thing they're really pushing into the system is previous sales that they had on the books, pre-harvest type of sales that people do. And then other than that, they're kind of holding on. I realize that could create a little bit of excitement here in the corn with a pretty, we're going to have close to a 15 billion crop, a little lower, a little higher, whatever, from there. So that could create some excitement later on. But right now, the producer doesn't like the prices it's looking at here off the combine and at the elevator. And so I think that the market's really in an attitude here of maybe trying to encourage some of these late farm harvest levels to move into the commercial channels, either into the soybean processing industry or into the ethanol industry or into export channels. And so I think that's still a very positive thing. Friday's setbacks, there really wasn't any Pacific news that all of a sudden was super negative. I guess one thing you might want to point to is that we are going to have some very above normal temperatures with this coming week. Really, I guess in the western, parts of the Corn Belt, it's going to be there on Monday, and it's going to be clear across the Midwest until potentially all the way to Thursday. Now, there was some talk it could come be back off on Wednesday, but in general, that encourages a pretty good harvest week ahead. And so that's going to be part of the things we're going to be battling here is the harvest progress, but at the same and the harvest potential pressure that might be happening. But at the same time, I think there's definitely the commercial channels are needing some of this grain, and so I think they won't be too negative after we've actually popped both beans and corn above their kind of magic overhead resistance here at $13 in November, and on Thursday we went above $5 in D's corn.
Yes, and we have to look for trade. China in the last few months has been very slow buying. Their economy is slowing down for a while. A comeback is expected for the next 6 months, and several analysts are weighing that they might come back with strong purchases from the United States.
Oh yeah, well, yeah, it's interesting in the world of Chinese procurements. They very reluctant when there wasn't a lot of money being made in their processing industry over there from that standpoint. And it's kind of surprising that there wasn't maybe a little bit of a firmer tone there, because they've been talking about higher hog numbers and things like that came out towards the end of the week. But I think you're right that the Chinese might be a little more aggressive here. They bought a lot of stuff from South America, and so they've been kind of shipping that stuff. But this is the time of year when the U.S. finally gets an edge in the price relationship between South America and China with the U.S. prices. Now, the one thing that's kind of hurt us on this has been this Mississippi issue, Mississippi River water levels, and that has impacted that situation. But I think, interestingly enough, some of the a lot of the shipments over the last 4 or 5 years have actually moved off the Pacific Northwest. So I kind of feel like the U.S. is still going to be able to participate in China's demand here, and I think that will be a positive for us. As I mentioned before, we had a very good crush level during record level, by the way. That 4 million was 165.5 was a record level for September. I think we did have a lackluster August, and I think everybody was deciding to take their downtime in August this year because they've been running so hard and heavy for the previous 6 months. So, but in general, China is going to be a big factor going forward, no doubt.
Yes, and some purchases might be increasing from other countries that are not as significant as China, but India, because of their bad crops, might be buying more as well.
Oh, well, they're going to be an interesting factor here in the veg oils, as always. From there, the one twist of it is that the U.S. is definitely backed out of the international supplying soybean oil to India and other places because we're utilizing it all in our renewable diesel programs here. Also, their crop sizes have been somewhat less than they hoped for, I have to say. Actually, there was, like, you're right, this week there was reports that their wheat prices were up at their 8-month highs. From there, wheat's also in the U.S. and around the world here has really been somewhat of a, I'd have to say, confusing factor. We really don't have a huge amount of wheat from last year by any means. We had a very small, I think it was 785 excuse me, that's what they're projecting for the coming year, 785 million metric tons. But at that point, the Argentinian crop looks pretty shabby at this point. The U.S. crop was a little better than expected at this kind of time cycle. But right now, Australia is going to likely be down. It sure appears like it's going to be a potentially 8 to 10 million metric ton smaller crop. There was some rains here a couple 10 days ago, or maybe earlier this month, that stabilized some wheat in the far southeastern part of the country. But Western Australia is still looking very tough. And so in general, I think the world wheat supplies are looking very less than optimistic here and about what might happen. And even in the U.S. here, we've got an interesting situation going on. We're getting our plantings and seedings of winter wheat in. It's kind of going along at our seasonal pace here, just below 70% at this date. But there's definitely some spots in even the Midwest, not so much, well, the Midwest some, but mostly in the Southwest where some dryness out there has stalled some seeding. So wheat, particularly if we can get to past some of the aggressive selling from Russia, and I think that's been part of the reason why this market has been somewhat lackluster. If we can get some kind of seasonal pop in here between now and mid to late November, that would help even the corn and soybeans too. That's wheat's somewhat of a leader long term, and hasn't been much of a leader recently, to say the least.
And what are you seeing for as a new price level for soybeans because of the uncertainty in Brazil and Argentina and also in the US?
Well, I'd have to say that this advance above $13 here, it's been choppy and this kind of stuff and all that. I kind of feel like that maybe we've established a base in here. Just below $13. Maybe you're talking 13.70 or 12.75, something like that. But I think there is a chance that this world prices between now and the U.S. Shipping season that usually kind of wind down around the 1st of December will potentially have a chance to maybe swing up closer to $14 from there. Just because of other emphasis. Interestingly enough, if somehow or other Argentina's issues continue to get worse down there, I don't know how much more we're going to see in reduction in the U.S. yield, but I do think that there's a chance that the final yield, and not so much the November yield. Surprisingly, the November yield doesn't always follow two down months like we've had here in the U.S. corn and soybean yields. But interestingly enough, the final yield in January many times has a lower yield yet. And so it's not going to be huge, I don't think, but it's easily could be both of them down. And particularly in beans, the prospects here of having a number that would be below 200 million, maybe that could spark more optimism above $14. We'll just have to see. Corn is going to be a real interesting one here. Because of our large crop, not so much because of the yield. The yield is not that great, but the number of plantings we had out there is going to end up giving us a output around 15 billion one way or the other, and so that's going to be a kind of a sluggers, if you will, on the markets. But I do think that the value going above $5 is the first indication we might have a swing of 30 to 50 cents yet this fall, and I would, at this point at least, the markets will then be really switching down to see what's going to be happening with the second crop corn in Brazil. Right now, the heat and dryness has started to slow down things in Mato Grosso. It's even damaged some of the young seedlings down there, suggesting they'd have to be replanted. There's been very interesting photos taken of tributaries of the Amazon that have dried up to the point where the houseboats are sitting on the mud, so it's a situation where the corn market surprisingly could be the biggest detriment, or excuse me, the biggest market in Brazil that could be hurt by this dryness more than the soybeans. The soybeans will probably get planted. They just might be planted late. And so if you don't get the beans in, you can't get the beans out, and you can't get them planted on a timely basis. They'd love to have a lot of that stuff done by mid to late February. If they get into March and planting their second crop beans in northern and Mato Grosso and other places, that really puts them into more and more of the dry season. And so all of a sudden, even the Brazilian ag department feels like that this year's corn crop is going to be less than last year, around 119, 120 million versus the 132 that was there last year. And it could get worse if that's the case. But unfortunately, that's not going to be able to be a high priority here in the corn market between now and and the 1st of December. After that, things will get a little bit different. But right now, the first part of this thing is just trying to get the U.S. corn crop in the bed, and also see what the fall seedings in South America get to do. Wheat could be the wild card if somehow or other the market gets excited about issues about wheat in Argentina, even in India again, and maybe even further problems cropping up in Australia. That could end up being a helpful hint if we can get that market to get advancement. Really, I think right now we get above the 6.25 level. Maybe that can spark some more enthusiasm across the board.
All right. What are you seeing next week?
Well, traditionally, after we set these kind of new pops or these markets advance above important levels, usually you kind of see some further advancement. But I guess I'm anticipating the fact that with the open weather we've got for the U.S., the market's going to be somewhat sluggish, but I don't see it pulling back a lot from there. And we'll be watching internationally what's going on. Like you say, in China, about what their purchases might be, or what's going on in the Black Sea. We didn't mention much about the Black Sea this week. Those are the things that will probably be involved in the markets. But I guess I'm going a little bit sideways on things here for this coming week. But I am optimistic about where prices might be between now and mid to latter part of November. I think we've kind of turned the corner finally on our seasonal lows here in corn and soybeans, and we'll see how quickly the markets want to advance here towards the closing of the U.S. transportation systems there around the 1st of December.
All right. Thank you very much.
Take care, sir. Have a good weekend, and we'll be at it next week.